Apple has been one of the better performing tech stocks this year, especially since April. I think one of the reasons why investors have liked Apple stock is because the company is approaching artificial intelligence with a capital light approach. Unlike Meta and Microsoft and Alphabet and Amazon, Apple hasn't spent hundreds of billions of dollars building data centers optimized for AI. And investors have rewarded Apple for resisting that temptation. But in this video, I wanted to dig a little bit deeper and look at the latest developments in what's going on with Apple stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I mentioned, Apple stock has been in rally mode, especially since April when it approached $175 a share. It's now up close to $273, trading near its 52-week high. And one of the positive developments with Apple is that it's reaccelerating revenue growth from a relatively low standpoint and accelerating revenue from its iPhone, and this doesn't even include the latest generation iPhone 17 lineup, which early reports indicate that it's off to a great start. In the most recently completed quarter, Apple said revenue jumped to $103 billion, which is up 8% from a year ago and a record for the quarter that ends in September. Its services segment achieved an all-time record of $28.8 billion, which is up 15% from a year ago. Now, it's great for investors that its services segment is growing at nearly twice the rate of the product segment or the overall revenue of the company, because services generate roughly twice the gross profit margin for Apple compared to its products. Its products are estimated to generate roughly 35% gross margins, while its services are estimated to generate roughly 70% gross margins. So when its services business is growing faster than the products business, the operating and gross margins of the business are rising. So each dollar of sales and services is more valuable than a dollar in sales and products in terms of profits. But that being said, Apple is unlikely to generate services revenue unless it sells people iPhones. That's really what gets people into the Apple ecosystem. And then people purchase a subscription to Apple Music, a subscription to Apple TV Plus. Maybe they buy the Apple bundle like our family does. We buy the services bundle, which includes Apple News, it includes Apple Music and Apple TV and Apple Arcade. The data, cloud data is also included, but you're unlikely to purchase that unless you have an iPhone and you're in the iPhone ecosystem. For the full year, they generated a record $416 billion in revenue, which is remarkable. If you think about the companies that are generating revenue at this size, Apple's really the only electronics primarily business that generates revenue in these levels. Walmart is up around 700 billion. Amazon is up around 700 billion. Alphabet is approaching these levels like Apple, but all of these companies are not selling electronics. They're selling other products, services, third-party businesses, retail. And so Apple is probably the best electronics or hardware company that we've seen in a very long time. Now, NVIDIA is growing to approach Apple and might surpass Apple relatively soon. But NVIDIA is not so much consumer electronics, it's more electronics or hardware that go into the data centers optimized for AI. Regardless, I think we can all say and we can all agree that the iPhone has been arguably the best product in history when measured by, you can count the several metrics like total unit sales, total revenue generated from a product, total profit generated from a product. The iPhone could be the best product in history. The company also launched a beautiful new software design that creates a unified user experience across all of their platforms for the first time. The design is crafted with new material called liquid glass that brings fluidity, vitality, and flexibility to their products. At the heart of all their advancements is Apple Silicon, and they are thrilled to launch new products powered by the A19 Pro chip and M5. These incredibly advanced chips make Apple products the very best place to experience the power of AI. I mentioned Apple has been investing in AI in a capital light manner. Even these chips, it invests in the research and development to design and create these chips, but then it outsources the manufacturing to other third party businesses like Taiwan Semiconductor Manufacturing Company and other companies, other partners that produce these and manufacture these. Apple invests in the R&D to create them and then outsources the manufacturing. And that's a capital light way to increase your company's revenue, unlike the other large cap tech companies that have been investing aggressively in capital expenditure in order to generate revenue growth. And that's really spooked a lot of investors. The sell off and the red days you've seen in the market this last 2 weeks has been a result of that question surrounding artificial intelligence, some of the circular arrangements that many of these AI companies are making, and the question marks surrounding how much money are these investments actually going to generate, or are these companies being wasteful and spending all this money? Another thing I'll note here is Apple over recent years has been vertically integrating more into the supply chain. Previously, it would partner for the chips that go inside Apple computers and Apple products. And more recently, it's been bringing them in-house and cutting out some of its partners that are supplying products into their systems, including partners like Intel and Qualcomm. Apple is relying on its own designs and its own chips to power some of their devices, and that creates a couple of benefits for Apple. For one, it improves the profitability because they can produce these at lower cost. And secondly, they control more of their consumer experience. They control more of their manufacturing because it's in their own hands, and they don't have to rely on partners to deliver the quality and the quantity at the right time, at the right price. They're in more control, and they can do that because they're at such large scale now, where these incremental changes adds incremental profitability, which then makes a big deal because you're generating $400 billion in revenue. If you can reduce your cost by even 1%, that makes a big deal. If your costs are 200 billion, you reduce your cost by 1%, that's $2 billion in added profitability. So these are the kinds of things that Apple is doing now. A lot of investors have been down on Apple stock because they're not innovating very explosively. They're just innovating at the margins. Things like I talked about in this video, integrating the supply chain, adding incremental improvements to the iPhone, not very big upgrades. And investors actually, even if consumers have complained about the lack of innovation, investors have appreciated that because that means Apple is keeping their costs low. And if your product is relatively similar every year, your production costs remain relatively flat and actually improve. And so your profitability expands. So if you're able to still generate lucrative sales while keeping your product relatively similar without making major changes, that's a really attractive investor proposition, even if customers are not thrilled about these changes. Thankfully, Apple boasts one of the biggest, strongest competitive advantages, which is the switching cost and just how inconvenient it is to switch out of the Apple ecosystem. We've been considering it for a while now to switch out of Apple's ecosystem because of several reasons, but the cost of switching, how much time it'll take for me to switch our electronic devices from Apple's to other providers like Samsung would take me a great deal of time. And that time and inconvenience is the reason why I really haven't switched out of Apple's ecosystem, even though I haven't been thrilled about the way their products and services have been working for me and my family. So Apple stock is trading near its 52-week high at $273. The 52-week high is $277. I calculated an intrinsic value per share at $218. So even applying a margin of safety, Apple stock looks A little bit expensive here, a little overvalued. I would not be buying Apple stock at these levels. In fact, I have Apple stock rated as a hold. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.